What's going on, guys? Happy Saturday. I hope everyone is enjoying their weekend. I'm just getting out a couple of technical analysis videos for you guys so we can be ready and well prepared for this coming trading week. Kind of give you guys a macro overview of, a lot of stocks that, we all love to trade each and every single day. By the way, guys, if you guys are not a member of my Discord, definitely check the link down in the description box below. Become a member, join the Discord, join the fun. Let's do some trades. Let's make some money. Let's all have a good time. With that being said, let's take a look at Tesla. Tesla was down 30 points on the day, just about 3%, and we closed at 1025. So the question that I want to ask you guys, or something that you may have heard, is Tesla setting up for the next potential big trade? Now, it's entirely possible, or is the market getting ready for a third leg down? It's also entirely possible. We still need more data to show us that, whether we're going to be able to participate in a trade to the downside or to the long side. One thing that I do want to kind of keep on the top of everyone's heads is that if you're a swing trader or a longer term investor, I wouldn't be loading up a ton of shares in the $1,000 range, that $1,000 to $1,100 range on Tesla. I would either kind of wait for more confirmation that we're going to break out and make new all-time highs, or I would wait for just a little bit more of a pullback. And I'm going to kind of show you guys exactly where you guys should be getting in to try to take advantage of, some opportunity, and where you would exit that trade if that opportunity fails you. So with that being said, we obviously know we're coming off these highs here. This $1,200, we all actually touched a little bit higher than that, but this 1204 as of recently back here in January, and then we kind of had this little bit of a spill before finding this first bottom, having this little dead cat bounce breakout, and then putting in a new lower high here. So if this is going to be our bottom dating back to the 24th of February, got this little bit of bounce, a little bit of pullback, and then we put in this new higher low for this big bounce. And this was a fantastic 3-week bounce from a price of around $800 all the way back up to $1,150. So if you did make money along the way on this trade, I hope that you took a little profits here, obviously held a runner. Now we're just in a little bit of a rest and consolidation pullback, which is completely healthy. But what I want to kind of show you guys, and why I think that Tesla could be setting up for a potential huge trade to the upside, is that all we're basically doing right now is coming back and testing our daily 20-day moving average. This is completely healthy. We were extremely disconnected from the 20-day moving average, and now we're coming back and pulling into this 20-day moving average. And also all of this price action on the way down, where we really tried to hold this level here, between this $900 and $950 range. A lot of days where price action was just kind of very, very choppy, stuck in this range before we finally broke down, and then kind of tried to test this area once again, chopped around, broke down before finally breaking out. All we are doing now is coming back into this price action. So if you are a longer term trader or you're a swing trader, I would want ideally to come back just a little bit more. If we can get a back test to 980, even if we can get a back test to 950, I think and I'll be quite honest, anything between 920 and 975-ish, I would be dollar cost averaging shares around there. Now, if that trade fails and you're looking to keep, your risk tight to the vest, meaning you don't want to let this thing squeal away if the market wants to do something extravagant, you can just pretty much use 920 as your stop. That is the daily 50-day moving average. Think about it like this, guys. Anything over the 50-day moving average, we are bullish. Even in pullbacks, we are going to hold those shares over the 50-day moving average. As soon as we start to lose the 50-day moving average and you see candlesticks on the daily time frame start to build below the 50-day moving average, it's definitely bearish and there's more selling pressure. I do not want to be holding stocks long unless you're a 5, 10, 20, 30-year horizon investor. But if you're more of the shorter term, swing trader, 6 months, a year, 18-month trader, anything below the 50-day moving average, you really don't want to be holding long, just due to the fact that your money is better allocated in other areas that you can potentially draw a better return, unless you want to take part in hedging your position long with buying some short dated puts on your position to kind of hedge against that, or even taking some Qs or the SPYs short while your stock is under the 50-day moving average. But if we pull back anywhere between the $9.75 and the $9.20 range, I think this is a fantastic opportunity to load up more shares on Tesla and then get a kind of a basing out period here around 920 to 950 area. And if we can get some consolidation and kind of turn this prior resistance into a new support level, I think Tesla is a very, very poised for a next run up, and not only an all-time high, but even 1250, 1300 extremely quickly. Guys, I hope this video helped. Please join my Discord. That link is down in the description box below. Also subscribe to my YouTube channel. Give me a thumbs up on the video. Leave me a comment. It would help out the YouTube algorithm. Push out this video to more and more traders. I will see you guys all in the next trading recap.